What's up, YouTube? It is Austin here, coming with another video. So today's topic is the people you need to call before you start your business, things you need to get in line. If you guys have been paying attention, I've been posting polls. How this is gonna work is I'm gonna post a poll with a few questions. As you guys answer them, I'm gonna try and make one of the next videos about that topic. So this video, I made a poll. You guys want to talk about more of the business side of things. A lot of us want to know how to get started, where to get started, and what to be doing. So that's the topic for today's video. Make sure to check out my future polls so you know what our topic's going to be, or that way you have a word in what the topic's going to be. So I've got 5 people kind of written down on some notes here that you need to call or go speak with before you need to go out, before you go out and start your own welding thing, or really any business in general. I think this business advice is pretty universal. So now, disclaimer, I know I got a lot of you guys down in Florida and Tennessee, North and South Carolina, and a few guys out west. Your state guidelines might be different than what we have here in Michigan, so you're going to want to look into it. This is just a rough idea who to go talk to. So, the first person you need to go talk to is probably either becoming an LLC, which is what I recommend. When I started out, I did start as a DBA, but I've transitioned since. A DBA stands for doing business as. If you decide to go that route, that's fine. I think it was like 15 bucks or something. And I think you just go register in your county, at least here in Michigan, that's what you do. An LLC, I think I did mine online, cost a few $100 if I remember right. An LLC stands for limited liability company. So, like if something goes south and somebody gets hurt and they sue me, they can only sue the company. They can't sue, in most cases, from my understanding, they can't sue you for your personal belongings as well. So the first person you need to go see, you need to come up with your business name, you need to go and file for an LLC. I would recommend LLC. You can do incorporation or any of that stuff if you wish. I think an LLC works in most cases. The second and third kind of go hand in hand, but the second person I would go talk to is I would start with calling your homeowner or car owner or insurance guy, your homeowner or vehicle insurance guy or girl. They might offer you some business coverage. If they do, you might be able to get it into a bundle deal. If not, they might work with somebody or know someone who can take care of you. Especially, you know, if you've been driving for a while or you've been in your home for a while, you already have a relationship with them, so you should use that. You should continue to exploit that fact and build that relationship onwards. And it's important to try to do all these things locally, because you never know. Like, you go in, you telling them you're starting a business, they go home, they talk at the dinner table or with their friends about this business you're starting, you might get a job from it. So, second person I would go talk to is a insurance company. You definitely want some kind of either, whether it be like limited liability, or excuse me, probably $1 million in coverage, but go what you can afford. They can adjust those rates accordingly. So definitely just do with whatever you feel comfortable and being able to afford. So the third person kind of goes hand in hand with the insurance, is your licensing. And this, I think, is probably really where things are going to start to vary, depending on state and what field you're going into. Like, just going out and doing farm repair, which is what I did when I started. I didn't have have like a license to do it or anything like that. I had a welding certification and that stuff, but outside of that I didn't. So again, that's something that's going to be different for all of you guys in different states and different situations. So you kind of got to do your research on your own there. But that is one. The fourth person you need to call is a bank, a business account. I know tons of guys who screw this up. They keep their business account and their personal account the same. It's not a great idea, for me anyways. It never seems to work out because it seems like, you know, it's just harder to handle your money that way. So what I did was I went to a bank and I opened 3 accounts. I opened 2 checking accounts and 1 savings account. Now that savings account is for taxes and small purchases. So like if I need any equipment that's under, say, $1,000, whether it be a drill press or an impact or any stuff like that, I will put a little money in there aside so I can just go and just buy that just buy it with that money. Again, total cash operation. The 2 checkings account. 1 checking account is strictly for your expenses that are going to come out of your account every single month. So, for example, your limited liability insurance, you know, whether it's $200, $300 a month, whatever it is for you, I know that's going to come out on the 1st of every month. So on the last day of every month, I put that money in that account so that when it comes out on the following day, the 1st, the money's there, okay? And I do that with what I call my repeat expenses. The next thing, the other checking account, is for my non-repeating expenses. So I make a steel order roughly about every week, maybe every other week when it's slow, but it's never the same order. It's never the same dollar amount. So that's what this second account's for. And you'll see a lot of me transferring money between the savings and the second checking for that reason. Was, you know, maybe I save a little money and now I'm gonna buy a drill press. That money is used to transfer to that account. That account is used to go buy the drill press. And that's where most of the money goes for my work expenses. You know, I'm gonna buy fuel a couple times a week, maybe. That money comes from there. Stuff like that. Stuff that you don't always know what it's gonna cost you, but you know it's gonna be there. That's where you put that money. And I usually start with between slow season, I might cut it back to $500 in that account. Busy season, I'll probably keep a $1,000 balance in that account, just because someone could call me tomorrow and give me a job that I need to go buy $800 worth of steel for. Sometimes it's more. Sometimes it's over $2,000 worth of steel. So stuff like that, I like to kind of keep the money in that account. The savings account for taxes, if you're in a 20% tax bracket, I pull 25% out of my profits for each job, and I put it in that account for a couple reasons. A, when you're starting out, peace of mind is great. So knowing you have a little bit more money in there when taxes are due, that's gonna help you. Also, if you have someone doing your taxes, which you should do, and I guess this would kind of be your 6th person to call as a tax professional. You want to work with them because, like, even if you just have them do your taxes. You should at least go in there and talk to them about how to set up your oh, that's better. You should at least go in there and talk with them about how to set up your spreadsheets or whatever it is you do for expenses. Talk to them about what you think you're going to make the first year. They'll let you know what kind of tax bracket you're looking at and save that money accordingly. Now, I think the number's like $20,000. I don't know, these figures could be wrong, but let's say $20,000 profit puts you at a 15% tax bracket. Anything you make over 25 or 20,000, whatever that number we just said, if it was 20,000, whatever, any dollar you make over that bumps you up to the next tax bracket. So if you're, you know, $80,000 at a 35% tax bracket, you're not getting taxed, from my understanding, on all 80,000 of them dollars. You're getting taxed on you know, when you make 20,000, you get taxed, that money gets taxed at a 15, and so on and so forth. And they'll tell you, if they're a good financial or tax professional, they will tell you, like, hey, if we can increase you $4,000 in expenses, we can write that off, and then that will lower you in a tax bracket, and you'll save $2,000 or whatever the numbers might be. That way, hey, you can, you know, if you've got that money to play with, go spend it on something and lower your tax bracket, saving you money. That's it's the best way I can explain it. They might explain it to you a little differently because they're professionals in that field. But that's, you want to go speak with a tax professional or an accounting person to figure out if you're going to keep your own books. They'll give you pointers. And I always put 5% extra, whatever tax bracket I'm going to be in. I always put 5% extra because I always like to have a little bonus at the end of each year or each quarter, however you pay in. Plus, you do have to pay them. You know, if they're a tax professional, they're going to charge you X amount of dollars to do your taxes, monthly or quarterly, whatever you having them do. If you want to just take your jobs and your expenses into them once a week, once a month, and have them be your accountant, a lot of them do that too. Personally, I like to crunch numbers, so I do that myself. The last person that you want to call is a financial advisor. And you don't have to do this right away, but I like to do it right away. So we talked about having 3 accounts. One account, savings account for your taxes and maybe a little business savings. One account for your repeat expenses and one account for your non-repeating expenses, right? Go talk with a financial advisor if you have an idea of what you're making, or maybe you're in your first year and you can show them what you made. Go talk with them and tell them you would like some sort of account, whether it be a mutual fund or some sort of an investment. My rule of thumb is I want to see the 30-year history of the investment, whether it's in a company or whatever. I want to see the 30-year history, and I like to see them averaging a growth of between 8 and 12%. And what I'll do is I will take, you know, whether it's, you know, $1,000 a month or $300 a month, whatever your numbers are, take that money, go give it to them, get it in an investment account, and that is what you call a big ticket purchasing fund. So say things are going really good, you're starting to shop, you want to put job shop in and you need a $20,000 break, and you're going to save up for it for 3 years. Instead of just having that money sitting in a bank account where you can touch it and it's growing pennies, and it's growing pennies over a year, you might get a few dollars. Put it in a investment account, and if they're a good investment professional, they will know what to do. A financial advisor, they will know what to do. Put it in that account, let it grow. You want something between 8 and 12%, and you want something that's fairly safe. This isn't a retirement account, though you should have one of those too. This isn't a retirement account. This is a big ticket fund down. So you don't want to take extreme risk. I know they say when you're young you should take risk, and when you're older you shouldn't. That's in your retirement account. In this, you don't want to take a lot of risk, because, you know, if, say, in 3 years you're going to need a new truck and you need $80,000, you don't want to be 2.5 years in and that account tank. It could happen, but you'll be a lot better off picking something that is a lower risk you can find. They'll find a happy medium for you. But put it in there and let that account grow. For my own personal, I have the same thing, and like that's money I'm kind of saving, like if I need a new truck down the line, or if I need a new welder down the line. Anything over like 5 to 10 grand, just depending on your income, I kind of like look at it like that. And you don't have to cash it all out. You know, if you've got $80,000 in there, you want to go cash out $10,000, you can. And then the idea is, like, the more equipment you buy, the more money you'll make, the more money you'll be able to put into that account every single month, and the faster that money will grow to buy more equipment later. Now, okay, what do you say? Like, I've got a good furnished shop. I don't see needing to buy anything for the next 10 to 12 years. That probably won't happen. You'll probably always be able to make something more efficient, but my personal plan for that is when I get to a point where welding's paying me good and I have extra money that I'm not maybe looking into dump back into the welding, I'm just going to diversify my portfolio. I'm going to start investing in real estate, rental properties, whatever. And then same thing with the rental properties. So if you're renting a house for $800 a month and you're clear, you know, say I've got $150,000. Let's back up. Say I've got $150,000 in my investment account. I purchase a rental property for, I don't care, say $150,000. Say I take all the money and I buy a rental property, okay? And I'm charging these people $800 a month. These are somewhat real numbers, but I'm charging them $800 a month. And after my expenses, maybe I'm clearing $600 because we bought the property cash. So between taxes and maintenance, say I'm clearing $500 a month. Plus, I'm putting in, you know, I've got an extra $1,000 a month from my welding. Now, I have $1,500 a month going back into that investment account. And I'll grow that until maybe I can buy another rental property. And then I've got $2,000 a month. And I can put that in and let it grow and let it grow and let it grow. That's like a long-term plan, but you should have one in place just in case, you know, not just in case, because that kind of stuff's going to happen. There's going to be equipment that you can't just cash flow in 3 months, okay? So that's a good way to do it. And let's talk about retirement accounts too real quick. Guys, you're going to need to retire someday. So if you don't have a 401k, these financial investors, they should help you out with like a Roth or a traditional IRA. You need that, guys. You got to have it. You're not going to be able to do this forever. Maybe you will, but you know, at some point, it's just a savings account for you. what I personally do is my profits each month, I split half of it and I put it in a retirement account, and then I'll take the other half and I'll put it in a investment account for equipment down the road. When I max out what I feed into my retirement, then I put everything into that investment account. But my goal is to max out my retirement every single year. Okay? So anyways, guys, let's just recap. First person you need to call is, or the first thing you need to do is go get yourself an LLC. The second thing you need to do is go talk with your insurance advisor or your insurance agent and get all your licensing in a row. The third thing you need to do is go to the bank, and I don't care how you do it if you don't use my system, but you set yourself up a system that works so that you can save money for taxes and have money to pay your bills. Fourth thing you need to do, you need to go talk with a tax professional or an accountant, figure out how to run your spreadsheets, figure out how much money to put away and when. Fifth thing you need to do, go talk with a financial advisor about investments, both retirement and big ticket purchases down the road. You know, new truck, new welder, $40,000 CNC table, rental properties, whatever interests you, whatever direction you want to take things. My goal is not to weld forever. Like, I think I'll always be welding, but I want to have other revenues of income. That's one thing my dad always taught me, was don't put all your eggs in one basket, because if you drop your basket, you're gonna break all your eggs. So I want to have money coming in from welding. I would like to have money coming in from rental properties, and I would really like to have money coming in from maybe a small hobby farm. So, oh, and YouTube. Eventually, I would like money to come in from YouTube. And that will lead me into this. If you haven't already, guys, please like, comment, and subscribe for more videos. Our schedule's working out really good right now. We're gonna try to be back to posting every Wednesday night. Again, make sure you keep an eye out for our polls that we also post on Wednesday night. To put in your 2 cents about what you want the next video to be about. Also, guys, seriously, I can't stress it as much. Blah, 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 blah. I can't stress it enough. Please subscribe to the channel, give us a thumbs up, share it with your friends, or anybody you think needs this advice, because there's a lot of good advice on this channel, and there's a lot of, not just from me, because there's a lot of you who are either 5 years in or 50 years in that can give us young guys some good advice. There's also guys out there who start in 30 days, and I get messages on my phone all the time. Hey dude, thanks for your advice. I just started, and I went and talked to these people, and it ended up being a huge job for me. Or I've literally had you guys call me and had me come help you guys on jobs. It's super cool. It's a great way to network. So anyways, like it, comment, please subscribe to the channel. See you later.